Stocks are at record highs, but corporate insiders are selling more than they're buying. Is this a reason that you should be concerned about your money and investments? Welcome. I'm Brian Sullivan. Wald and Gina Sanchez are your Trading Nation team today. Gina, corporate selling I get. I look at it. I think it's important, but I am a little worried because people sell for different reasons. Could be on a pre-planned plan. They could be selling for tax reasons. They could be selling because they've got to put their kid through college. Whatever it might be, does this metric concern you at all? Does it tell you anything?
Well, you're right. People do sell for different reasons, but when you get sort of mass corporate selling or sort of everybody sort of doing the same thing, you have to ask yourself, why aren't people reinvesting in their companies or keeping their money within their companies? And that's an interesting data point. But it also supports some other pieces of data that tell us that the rally has been breaking down for a few months now, and we're going into the summer doldrums where you tend to not get a whole lot of action in the stock market. But if anything, we know that valuations are and have been stretched, and we're starting to, we have an underlying positive earnings the earnings season has been very good. We've seen, a significant number of companies beating their estimates. But look, if you look out towards the end of the year, they're going to have a hard time hitting those end of the year estimates. And we have a lot of, wood to chop between now and the end of the year to prove that we should be at the levels that we are. And I think that's really what should be concerning investors.
Well, it is now. You're on the record as saying it is, so we're gonna pay attention to that. Wald, you love charts. This is basically a chart, sort of the ratios of sellers to buyers. What does it say to you, if anything?
I don't think it's very meaningful. If anything.
Well, thanks for coming on. No, I'm kidding.
Well, I think it makes for a good story. I would say the warning should be if you're short the market. That look, I was looking at the ratio before coming on, and it's been on a sell signal for the last year now. Through that time period, the market's been up 16%. So again, I continue to hear the same story, reasons to sell, but the market just keeps on moving higher. And I think we're just still scarred by these memories of 2008. And it's created what we're calling this fear of heights, where every market rally, the assumption is going to be followed by the next market collapse. And it's been this way for several years now, and yet the market just keeps on turning higher. Our differentiated view is actually that while elevated valuations do indicate potentially a cautionary late cycle outlook, we see the market actually behaving in a manner that's very consistent with the early to middle innings of a new advance, given the internal breadth of the market, the leadership, the credit conditions. So we side with the market's behavior here. We think the market continues to go higher, and this insider selling ratio is not something to be worried about.
Okay, not worried about it. You're on the record as well. Wald, this is not important. No, I'm kidding. Wald, thank you very much for coming on. Appreciate that. Gina Sanchez, as always, both of you, thank you so much. And folks, be sure to check out the live version of Trading Nation. I'm Brian Sullivan. We'll see you there as well. Take care.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.